Welcome to the Mastering Commercial Real Estate Podcast, the show where we dive deep with top investors, operators, and industry pros to uncover how they're building wealth and creating real impact through commercial real estate. I'm your host, Corey Mortensen, capital raiser, commercial investor, and founder of 19 Holdings. Whether you're just getting started or looking to level up, this podcast is your go-to for real insights and actionable strategies. If you enjoyed the show, please hit that like button, leave a quick review, and share it with someone who should be listening. If you've got feedback or ideas to improve the show, I'm always open, and I want to make this better for all you listeners. If you're ready to start building wealth passively through commercial real estate, visit 19holdings.com. That's ONE-9 Holdings to learn more and join our investor list. Enjoy this episode. Hey, everybody, and welcome to the Mastering Commercial Real Estate Podcast. I'm your host, Corey Mortensen, and today we have Alexey Chernobelskiy, who is a real estate investor and entrepreneur, and we're excited to chat with him about his background, learn more about what he does on a daily basis, and get some helpful hints and advice for everybody out there. So, Alexey, thank you so much for being on the podcast today.
Yeah, for sure. My pleasure. Thanks for having me.
Absolutely. So, Alexey, if you don't mind just introducing yourself to everybody, tell them where you're from, where you are, what you do, and what you focus on a daily basis.
Yeah, good questions. I guess I come from the institutional world. I used to be at a REIT. I sit in Phoenix now, but did my time in New York, as they say. And after being in the institutional world for some time, I quite literally stumbled upon like the GPLP marketplace, which is sort of what I would refer to as lower middle market syndications, like not the really big pension money deals, but rather things that are going to $50,000 checks and $2 million checks, that type of crowd. And I just realized how inefficient that marketplace is. Obviously, all private investments are much less efficient than public ones, but I guess it surprised me to what degree that was the case. And so I set out to build in the space to basically try to bring GPs and LPs closer together through transparency. My first stab at that was writing 2 times a week, which I've done for, I guess, a year and a half now, almost 2 years. And that's at 10,000 subscribers now. Then most recently, I launched GPLP Match, which is sort of like a very direct way for GPs and LPs to meet each other. Happy to speak about any of them. And then, the way I make most of my money is speaking to LPs directly on opportunities that they're looking at, or perhaps opportunities that they're invested in already.
And so with you being the principal at Centrio Capital Partners and your focus with advising LPs, what is one of the most common questions and situations that you find these limited partners in that gets them into the door with you and your company?
I think most people find me through social media. Like I don't really advertise. In fact, I think I've only done it once. I spent like $50 on LinkedIn. It was worthless. But I post a lot on Twitter and LinkedIn. People follow me, and I think over time, if they have a question, they reach out. So that's typically how they come to me. And again, the range of questions will very, very much vary. One day I'll deal with a distress situation that needs a lot of attention. One day I'll deal with like cases of securities fraud, or other like really unfortunate situations that LPs are in currently. Other times I'll hear from LPs that are super happy, and they like 2 or 3x their money. They're trying to find other investments and they just want to find something else. So it's really all over the place.
And with the space that you're in, which is primarily capital raising, this is obviously one of the more looked at and regulated spaces in terms of how we can operate. What are some of the rules, some of the basic rules that people need to be aware of when they're raising capital for these types of investments?
Well, so 2 things. I wouldn't say that I'm in the capital raising space. In fact, they don't raise any capital for anyone. That's number 1. Number 2, I think I'm not an attorney, so you should probably interview an attorney for that. Having said that, just broadly speaking, I would tell you, you would be shocked like how many people raise money without thinking about securities laws. And I think it's like a massive mistake. I can't really go into detail as to why. But the risk that the GP is putting themselves into is 100% not worth it. And there are pretty simple folks that you can speak to now that like do this at scale and can help like fairly cheaply to be in compliance. I just think it's a big like short, what's the word? Short term, I guess, a short term vision mistake. And obviously, I understand like people are like bootstrapping, they're cash tight, right? But if you're trying to like build a business, you should really do it right from the beginning. And there are pretty big implications to not doing it right.
And so when you're looking at people who are looking to get into what it is that you are doing, what are some of the first steps that people should take in order to do that the correct way?
Well, I guess the first question is defining what it is I do. Sometimes I wonder about that myself. It's a lot of different things. Look, I think probably the number one question is how are you going to find clients, right? Like that's probably the number one question in any business, even if you have a good business and a good value proposition. If people don't know about you, that's a problem. And LPs, it happens to be, are very hard to come by. They're like hard to find because they don't necessarily like congregate in certain areas. Maybe a golf course, I don't know, but I don't know how to golf. So that I think that's the first question is like, how are you going to find clients? Number two, obviously, is like, do you have the experience to advise them and analyze something properly and fairly and independently? Right, that's probably another thing. But yeah, hopefully that helps.
Yeah, and I think that you said it really well there is to do it fairly and independently, because that's where I think you referenced before, but a lot of the people who were doing capital raising and putting people into deals but not necessarily running them, or even if they were running them, were getting into trouble, and we've seen a lot of those operators come down, and just because they weren't aligned properly. They see what they could make on fees, they see what they could make for placing capital. And these things were very problematic in the industry in the last few years. And with everything that's happened in short, you being able to find investors, and you mentioned that you were very active on social media and finding quite a few of your clients through that. Would you say that that's your biggest strength is social media?
It's not. I suck at social media, but I'm just, like I'm just consistent. I try to post things that are valuable, and if you do something consistently over time, you get like okay at it. But I'm definitely not amazing at it. It's hard, because you're subject to an algorithm, right? And so even if you have a decent number of followers, getting in front of them takes like tactics that I'm not necessarily comfortable like taking many times. It's usually like around like publishing a bunch of negative news or like what's called rage bait, which is sort of like, something that'll piss off each side of an opinion. I don't know, like that stuff just doesn't interest me so much. I try to be fair and most people don't want to hear fair.
I agree. Yeah, I've been trying to teach myself the marketing arm, because my natural way of giving and displaying and offering information and value does not work in how the algorithms work with LinkedIn and Facebook and things like that. You do have to kind of play the game the way they want you to play the game in order to get your message in front of people. And then once they're in there, then you can really work them how you want to work them and show them the value that you can bring. And if social media is not your biggest strength, what would you say is your biggest strength?
Probably analysis. I mean, that's what an information and data nerd. You know what I mean? I never really thought that I would own a business. So here I am. And a big part of it obviously is sales in a sense, which I don't necessarily love, but I need to get in front of people. And slowly I just realized that if no one knows about me, then I could have the greatest value proposition of all time, but will have no sales.
So what would you say is the biggest change that you've undergone in your business and how you approach business, and namely in the last year or two, just because I feel like that there's been so much change with technology, real estate as an industry, and the capital markets?
I mean, I think the biggest change for me going from a W-2 to entrepreneurship has probably been social media. Like I invest a lot of time into it. And I honestly, for about like a year, I posted without really knowing why. Funny enough, I mean, I'll tell you a story like about, I guess this was like probably 2.5, 3 years ago. A friend of mine told me that like Mr. Beast was like one of the top 10 most influential people on like the Forbes magazine or one of these like rankings, right up there with like the president and all the other people. And I just like laughed at the guy and I was like, that's ridiculous. Like, what are you talking about? That's like such a crazy idea. like he's just like a kid. And the response was like, yeah, but like his like a single post influences the opinions of more people than a single post from the president. And then it finally clicked. I was like, oh, that's crazy. That's like, I think that's actually true, you know? And then so the light bulb went off, so to speak, and I was like, wow, okay, so it's not really about who you know. It's actually who you know is helpful, but as you're building a business, it's really about who knows you. And I was like, oh man, like I better get on the social media thing so that, I'm still not doing TikTok dances and whatever, maybe one day, but I got comfortable enough to post pretty consistently on social media, on LinkedIn and Twitter. And I think it's been pretty amazing. Like I've met a lot of incredible people that way, has refined my character a lot, like it's not easy taking criticism from like a bunch of anonymous accounts, but it holds you accountable. It's pretty awesome.
And what would you say is your biggest success to date?
I mean, probably having a family, but like, I assume that's not what you're referring to.
No, it is. No, it is. But for the sake of the
Yeah, I
podcast,
mean,
professionally.
yeah, business side. I don't know. I mean, I think I'm pretty proud of myself with like the GPLP launch. Came up with was just like an idea, and then I like coded everything myself. It sounds very simple, but I very much struggled through that for weeks. And now there's like 1,800 LPs on a platform that a GP can reach within like a 5 minute submission. It's free to both sides, and I just think it's pretty cool. Like there's real people meeting each other. People on both sides are generally thrilled, and it's very touching. Now, the next question you're going to ask is like, that's cool, but how are you going to make money? And I guess I don't really know yet. I've started ads, which has been pretty good so far, but it's also not like what I would call like life changing.
So what would you compare the marketplace to in terms of another platform, familiar platform that is out there? Is there something that you kind of modeled it after, or how is it structured?
Yeah. So I don't, as far as I know, I don't think there's anyone that's doing what I'm doing. Like there's, I think many people initially think of me as like an equity broker, but I'm not because I don't collect any commissions. In fact, I can't because I'm not a broker dealer. Some people will say, "Oh, is this like a crowd street?" And my answer to that is also no, because unlike a crowd street, the whole premise of the platform is like LPs tell me what they want to see, right? So like Corey logs in and he says, I want to see multifamily deals, but only if they're in Boston and they must have year one cash flow of 6%, for example. And if that comes through the system, then I send it to you and diligence is on you. In other words, the crowd street, and all the other platforms, I don't mean to single them out. Like they're all great. I just think the premise there is we will do all the diligence and we will send you something that's good. Obviously, there's pros and cons to each side, but I guess my thesis is a lot of LPs actually like to do diligence themselves and they know exactly what they want. And so I'm only going to email them when something matches what they want. And then the rest is up to them. And, it like takes a second to reach out to the GP for any questions. Yeah. So funny enough, I would actually compare it most. You're gonna laugh, but like Bumble, I actually like spend a lot of time listening to podcasts on like how that app got developed. I'm not an app, like I'm definitely not anywhere near as fancy or successful. But like the basic premise was like GPs are the guys, so to speak. LPs are the girls. Just like in Bumble, the guys can let the girls know that they're interested, but the girls have to initiate contacts first, and contact information isn't shared until then. So similarly here, like GPs can show interest in LP capital by submitting a deal. I run a bunch of code to make sure that whoever I'm sending it to has explicitly said that I'm interested in investing in something like that. But then ultimately the decision to like reach out and initiate contact comes from the LP.
Gotcha. And so when you have these GPs who are engaging on the site and they have a deal, what stops people from just filtering to just the very best deals? But because each deal is different and can have different benefits, you've gave the example of day one cash flow, right? That sounds great, but what about filtering or letting people know, especially if they don't know as an LP, about these other opportunities that are out there that could maybe 3x their money, but they won't get cash flow, and making that make sense and so that people can compare apples to apples?
Right. I think the way that I think about that is like, look, I think there's a lot of education opportunity for LPs, but we also shouldn't like sort of like dumb them down and just be like, they're not able to like look at stuff and tell us what they want. Right. In other words, the person who signs up for my platform and puts in cash flow has probably thought about the fact that like cash flowing deals might not be the highest IRR because perhaps like they're not adding a ton of value, and therefore, it might be like a 1.5x as opposed to a 2x. So on average, obviously there's exceptions, but I'm just saying like many times these people know that, right? And they're just like, I know that, but I really want cash flow and I don't want to get like 50 different deals from different sponsors when only one of them has cash flow. Like just send me the cash flow one. Don't bother me with all this other stuff. It's so like that. I guess that's the simple premise of the deal. And many LPs, for example, are obsessed with like co-invests, right? Or like acquisition fees not being too high or whatever. And those are also filters. They can put in exactly whatever number they want. And I sort of like think of myself as the email guy. Like I just follow whatever they told me and send it. And my only job is to make sure that like if they said they don't want to see deals outside of Boston, to make sure I don't send them a deal in Arizona by accident,
Gotcha. And in terms of the LP education, you have lots of materials out there through what you've been putting out, social media, your websites. One of them is the 26 questions that LP should ask, correct?
That's one of them, yeah.
Yeah. What would you say are the top 2 or 3 questions that LPs should be asking their GPs as they're vetting deals? Because they can take a look at the numbers and that's a good way of obviously getting a feel for it. But to dive deeper
Yeah.
and to really understand who the operator is, because in my opinion, that really makes or breaks the investment. What are some of those questions that people should be asking?
Yeah, so I mean, first of all, I would say unless you're extremely experienced, you're probably not asking enough if you're only asking 3 questions. And if you only came up with 3 questions, it is very likely the case that you don't understand the deal. Again, with the only caveat being like maybe you're like a real estate professional yourself at a big shop, you've done like a ton of deals and like you just like live and breathe this type of asset and it's just like abundantly clear without even asking what's happening. I think if you forced me to say only 3 questions, I think all of them would actually probably be in the execution pillar. I like to think about LP investments in 3 different pillars. So first one is execution. Second one, and execution just while we're there, like deals with who is the GP? Are they like reliable? Are they honest? How is their track record? Can they actually do this? Have they done this before? Like, very basic questions about their ability to execute. The second pillar is alignment of interest, which is a combination of fees, co-invest, and waterfall. And then the third pillar is the property itself. And so I would actually, again, if you forced me to say 3 questions, I would not get to the second pillar or the third pillar. I would start with the first, right? And you would try to understand what the GP's background is. Have they done this before? What other deals have they not just bought, but also sold? And I always tell people this, like it's totally fine if you're dealing with a GP that's on the first deal, right? That's partially the reason why I started GPLP Match is many LPs I found are like the only deal they're getting is the one from their next door neighbor, and they don't necessarily understand like what market is or what's out there, right? What types of deals are out there, what terms are out there. And so the whole point is you should feel like you do have options because you do. Meaning it's true that the GP would love your money. It's also true, by the way, that the right GP can probably get your money somewhere else, and they're not necessarily need your money, right? So there's a balance, but at the same time, you shouldn't just feel like, oh my gosh, I got my first syndication, like I should put my savings in there. So I think the first pillar is undoubtedly the first thing that people need to spend a lot of time on. And to be candid, on many deals that I review, like sometimes it doesn't get to the second and third pillar, sometimes it doesn't get to the third, but gets to the first and second. You'd be surprised how much like strange behavior and dishonesty is available to pick up on, just in terms of the first pillar.
And you talked a lot about deal terms and alignment of interest. What does a good GP LP alignment look like in a syndication? Can you give any examples of deal structures or terms that align with interests or versus ones that raise red flags for you?
Yeah, I don't like the word red flags because it sort of implies you pass based on a single factor, and I just don't think investing is that simple. While we're there, I'll tell you the only red flag that I've like really publicly published is the lack of return on capital in the waterfall. In other words, if the GP is collecting money prior to you getting your money back on a capital event, 99% of the cases, those deals are very, very challenging to make them make sense from an LP perspective. Not always. I've seen some counterexamples, but they're extremely, extremely rare. So I guess to answer your question, I think the alignment has to be something like this. Typically you'll want to see, I say typically because size of the deal is important, funds are really big, right? It just depends. But on a typical deal that's smaller, you would want a co-invest that is larger than the acquisition fee in dollars, so that like you can actually see that the GP is putting something into the property. Then a typical waterfall will probably be, without telling me anything else, probably 8% with an 80-20 split. And that's how I sort of think about again, if you tell me nothing else, that's where like the baseline is. Now from there you can say, well, this guy has done 60 realized investments, so therefore he can do X, Y, and Z. And I would say, yeah, like I mean, at some point you can do whatever you want. And by the way, IGP can do whatever they want from day one, right? Like there's no legally required fees that they can charge or splits or whatever, right? They can do whatever they want. But I think many of them unknowingly make fundraising very difficult for themselves because they are like really far from market and they don't realize that they are much more experienced sponsors with pretty great deals, raising money at much better terms.
And in a recent post, you said that raising capital for deals is brutal right now. And why are projects having so much trouble raising capital and tough to fund and the capital raising market? I've heard this from other guests as well, talking about capital raising, but why is capital raising so difficult right now?
So I think that post was referring to development. I think development is like really brutal, very brutal. Like, and to be candid, I think most of the folks that are getting attention in development are very experienced nowadays, meaning people are still looking for development deals, but the capital tends to flow to much more experienced operators than, let's say, 2, 3 years ago. I think it is still true more generally that capital raising is much harder now. And I think it makes sense that that's the case, right? Like, I mean, you can get 4 to 5% yield on your cash just by doing nothing, right? So that doesn't necessarily create urgency for LPs. It also sort of like creates a new floor that didn't exist before, like when interest rates were basically zero, money was almost like burning a hole in people's pocket because they like needed to get rid of it as fast as possible, right? So some GPs would raise their capital within hours of blasting out something, and that's just because people didn't want to stick it into Robinhood or whatever they were using. Right. So I think it's just a different economic environment. And more than that, like a lot of LPs that are active are also sitting on some deals that are not doing well. Right. So they're trying to like sort of recalibrate and understand where their own finances are and whether they made some mistakes in the past. Are there some lessons from those mistakes? Do I still want to continue to participate in private placements? Or perhaps I just go into the stock market and like not think about this stuff.
And if I'm an operator, whether experienced or just for the sake of example, somebody who has the experience in the space and is fully qualified but wants to jump into or identifies a deal that they'll need to syndicate. Say they have, maybe a handful of investors that they can tap into, but they're not going to be able to raise the let's just say $2 or $3 million to get the deal across. For somebody who is looking to get into that space and start out, how would they find these LPs to get the list ready to blast out before the deal? And what are some tips to one, generate that list and present that value to these investors?
Well, finding the list, I guess I don't know, like I guess I'm slightly biased, but I would argue you might not need to find the list, right? The list is on my computer, right? In other words, what's important is the deal good? Do you present yourself well? And are the terms to the LPs fair, right? So and if you get those right, then you'll probably get some attention on the platform, right? However, if this is your first deal and you don't present yourself so well and like the returns to the LPs are sort of more aggressive than someone who's done 50 deals, then you probably won't get a lot of attention. And it's also a lesson, right? It's like it's not such a pleasant lesson, right? But it is one, right? And so so there's obviously that LP list that exists. If you're referring to like starting your own list, I think most people start with like friends and family. They'll just sort of call their friends, get 50K here, 100K here, start small, and then slowly grow. Obviously, that list grows. Their clients get wealthier, assuming they do the right things. A lot of people will reinvest. And I think being a GP it's a slow game. Like you're basically trying to build a startup based on fees, and promotes are 4 to 5 years out.
Yeah, it's definitely been a change, and I think you referenced it very well earlier with before people just had so much dry powder on the sidelines that they were just itching to put into deals, and so capital raising just went very, very easily, very swiftly. You could get groups together very quickly, and as long as the deal was fine, you could get that done very easily. But now with everything, how it's changed, especially starting from scratch, and for a lot of people, it kind of feels like they're starting from scratch. And so I think that this platform that you've created is very special and very interesting and very cool to try and bridge that gap for both the LPs to try and find more diverse operators and find the right deals. And the same goes for the GPs to go out and find the capital that they need with the right people and build these relationships and get these deals funded. But for you, what does your average day look like? Your average week look like? What are you mostly focused on working on and spending your time?
I'm probably like roughly 50-50 between GPLP match stuff. I mean, I try to send 2 to 3 deals a day. And so like, again, people need to know about the platform. People have questions sometimes when they're submitting. Sometimes I have questions after submission, right? So there's like some upkeep there. The actual sending part is easy because I've coded most of it. And so that's roughly half of my day. And the other half is like helping LPs directly, whether it be on existing investments or future ones.
And so when you set your goals, how do you set your goals and what are you currently working towards on whether it's personal, macro, business, whatever it may be, what are you currently focused on goal wise?
I think I have like pretty broad goals. The broad goal is what I set out to do, which is can I bring transparency to the marketplace? And I think there's a ton of parts to that, and it's probably like a decade-long process at best, I would say at best. So, I think it's nice to think about like larger goals, but the day-to-day grind is I think what sets people apart, just like not giving up quite literally.
Gotcha. No, that's perfect. And I know you have to go, you have a call to get to. So I want to thank you for your time today. I really appreciate it, Alexey. Guys, this has been Alexey Chernobelskiy. Thank you so much for tuning in to the latest episode of the Mastering Commercial Real Estate podcast. We'll see you next time. Well, that's a wrap for today's episode of the Mastering Commercial Real Estate podcast. Thank you so much for listening. If you enjoyed the episode, go ahead and give it a like, leave a review, or share it with a friend. It really helps us grow and reach more people who want to master this space. If you have any feedback or ideas to improve the show, reach out, leave a comment. I'm always looking to make it better and tell us what you like or didn't like. And don't forget, if you're ready to start investing passively and want to learn more about upcoming commercial real estate deals, head over to ONE-9 Holdings, that's 19 Holdings, and join the investor list. Thanks again for listening, and I'll catch you on the next episode.